Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that is looking to raise some serious cash through a stock sale, and we'll find out if this move is a smart play or a desperate grab. Let's talk about GSI Technology Incorporated, a company that on the 21st October 2025 decided to shake things up with a sizable offering of new stock. They filed this report with the US Securities and Exchange Commission, which is basically the watchdog for the stock market. They want to make sure everything is above board. So, what is the deal here? GSI Technology Incorporated is selling new shares of its common stock. Think of common stock as the basic ownership of the company. They're selling quite a bit of it. They are issuing over 1.5 million shares of their stock to an institutional investor. That is a big chunk of new ownership being handed over. And they are selling these shares at $10 a piece. Pretty straightforward stock sale on the surface. But here is where it gets a bit more interesting. They are also selling what are called pre-funded warrants. Now, what is a warrant? It is like an option, a ticket that gives the holder the right to buy more shares of stock in the future, usually at a set price. These particular warrants are being sold for about $9.99 each. They can be exercised almost immediately, and the price to buy the actual stock with these warrants is super low, just 1 cent. This is often a way for companies to sell shares while giving the buyer the same economics as buying the stock directly, but with some tax or accounting benefits for the buyer. It also looks like a lot of shares are being potentially issued here, nearly double the shares they are selling outright. Putting it all together, this stock sale is expected to bring in around $50 million for GSI Technology Incorporated. That's a substantial amount of money. What are they going to do with all that cash? They say it is for general company stuff, but they specifically mention developing their APU product line. APU probably stands for something technical related to their business, and pouring money into product development is generally a good sign, assuming the product has potential. Now, there are some restrictions as part of this deal. For 60 days after this offering closes, GSI Technology Incorporated has promised not to issue any more stock or announce plans to issue more stock. This is to prevent diluting the value of the shares they just sold too quickly. It is a way to reassure the new investors that their investment won't immediately lose value from more shares flooding the market. And who is helping them make this happen? Needham & Company LLC is acting as the placement agent, meaning they are the ones finding the buyers and brokering the deal. Companies usually pay fees for this kind of service, so not all of that $50 million will be pure profit for GSI. This stock sale is happening under an already existing registration statement. Think of it like having a pre-approved permit to sell shares. This means they've already gone through a lot of the regulatory hoops for this type of offering, which can speed things up. Beyond just the stock sale, on the same day, the 21st of October 2025, GSI Technology Incorporated also put out a press release about the pricing of this offering. This press release, which is included as an exhibit, basically confirms the details of the deal, such as the share price and the number of shares being sold, informing the public about the specifics of this fundraising effort. Finally, a standard part of these filings is the list of all the documents that back up the report. This includes all the legal agreements, opinions, and the press release we just mentioned, giving you the full picture. So what is my take on all of this for GSI Technology Incorporated? Raising $50 million is a significant event, especially for a company focused on product development like their APU line. It shows they have ambitious plans and a need for capital to execute them. The fact that they are using a registered direct offering and pre-funded warrants suggests they are trying to be efficient in raising funds, while perhaps offering some flexibility or perceived benefits to the investor. However, we need to remember that issuing new stock can dilute the ownership of existing shareholders. If these new shares and potential shares from warrants flood the market without a corresponding increase in company value and profits, the price of existing shares could go down. The main risk here is whether the investment in their APU product line will pay off. If it does, this could be a very smart move to fuel growth. If it doesn't, then they've raised a lot of money just to watch it disappear. The company's direction seems to be focused on innovation and expansion through this capital infusion. The opportunity lies in the success of their new product development, capitalizing on market demand for whatever their APU technology offers. The risk is that market conditions change, the technology doesn't pan out as expected, or competitors emerge with better solutions. In conclusion, this is a strategic move for GSI Technology Incorporated. It's a calculated risk to fund growth through product development. Well, be watching closely to see if this investment pays off and if they can turn that $50 million into significant future returns. Alright, that is our breakdown of GSI Technology Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.